Do you want to hear an investment opportunity that offers 24% returns over the next 5 years? Sounds amazing, right? And since you are watching this video, there's even more, an additional 4% cashback on your investment amount. Pretty tempting, isn't it? But hold on, this opportunity is from an unregulated platform called FHL India. No details on how your money will be used, how the returns will be generated, or what security you will get. Are you still interested? Maybe yes, maybe not. Hey there, I'm Yash Roongta, founder of AltInvestor, India's largest community on alternative investments. I welcome you back to the AltXtra series powered by GripInvest. With AltXtra, we are decoding the complexities of high-yield investment options so that you can make smarter financial decisions. Today, we are diving into the risky waters of unregulated investment platforms. Spoiler alert, they are not as safe as they seem. So stick around to find out why. Let me make something very clear right away. Losing money is always a risk, whether you are investing in regulated platforms or unregulated platforms. The purpose of this video isn't to say that all unregulated platforms are bad, but to give you the full picture so you can make informed choices. So, what exactly is an unregulated platform? In simple terms, these are platforms that aren't monitored by any regulatory bodies like SEBI or RBI. While they may offer exciting investment opportunities, they come with some serious risks. Let's break those down. First up, lack of regulatory oversight. These platforms don't fall under the watchful eye of SEBI or RBI, meaning there's a much higher risk of fraud or mismanagement. Think of it like playing a game with no referee. It's fun until someone breaks the rules and you lose. Second, limited transparency. Unregulated platforms often don't provide enough information about their processes or who's behind the whole operation. This lack of transparency makes it hard for you to judge the real risk of the investment or the platform. Third, unqualified promoters or negative intent. Regulated platforms must meet certain standards for management quality and financial stability. Without these checks, you could be trusting your money to someone who isn't qualified to handle it. Fourth, potential for lower returns or capital losses. While some platforms might promise higher returns, they often fail to deliver, sometimes leading to a total loss of your investment. And the legal agreements, they are often so vague that they offer very little protection. Unregulated platforms count on you not wanting to deal with a long legal battle so they can get away with more than you would think. Fifth, comparison challenges. Without a standard framework set by the regulator like SEBI or RBI on what information should be disclosed, it becomes really tough to compare investment options within the same category. Sixth, legal and compliance risks. Regulators can freeze or shut down unregulated platforms if they violate laws, leading to massive losses for the investors as well. All of you remember Growpital, right? SEBI froze their accounts for breaking the collective investment scheme rules. Seventh, operational risks. Many unregulated platforms lack strong operational infrastructure, which raises the chances of technical failures or even data breaches. You have probably heard about crypto exchanges being hacked, right? Regulated platforms, on the other hand, need to undergo regular audits to ensure their systems are secure. Lastly, limited recourse options. If something goes wrong, your legal options are limited. Without a regulator to step in, recovering your money becomes a lot harder. Okay, now that you know the risks involved, let's talk about some real world examples of defaults on some unregulated platforms. Here's one by our sponsor of this video, Grip Invest itself. In its early days, when Grip was still an unregulated platform, it offered an asset leasing deal for Big Spoon, a cloud kitchen startup. When Big Spoon failed to pay the lease amount, Grip had to take legal action. Some assets were recovered, some were not, but the case is still pending and a full recovery may not happen. Grip Invest since then has moved on to become a SEBI regulated OBPP platform. Let's look at Growpital. In January 2024, SEBI froze Growpital's accounts for violating the collective investment scheme rules. Investors are stuck waiting on 192 crore rupees and the founder has already claimed 100 crore rupees in losses and has also moved on. Another example is the Arzooo default on AltGraaf. Investors face defaults when Arzooo, a B2B retail tech platform, failed to honor its repayments on invoice discounting deals. Only about 34% of the outstanding amount was recovered, leaving many investors at a principal loss. The platform is still trying to recover the funds, but progress has been very slow. And it is very likely that the investors will have to deal with this principal loss. These examples clearly highlight the dangers of an unregulated platform. Sure, the opportunities might look enticing, but the lack of oversight and transparency, along with the legal and operational risks, can lead to significant financial losses with very few options left for recovery. Okay, so what's the key takeaway here? It's simple. Always check if a platform is regulated before you invest your hard-earned money. Protecting your principal is far more important than chasing higher returns. That's it for this video. Tell us, which platforms are you investing your money in? Are they regulated as well? Let us know in the comments below. And if you haven't joined the Alt Investor community yet, what are you waiting for? Just scan the QR code here or click the link in the description below. In our next video, we'll compare LoanX and P2P lending, two products that might seem similar but are quite different. Stay tuned for more insights from AltXtra powered by Grip Invest. If you found this video useful, don't forget to like, share and subscribe. Thank you and happy investing.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and or default in payment. Read all the offer related documents carefully.